We spoke to Dr. Anish Shah, Group CEO and MD of Mahindra Group, about the company's PV sales numbers and what's the outlook for the quarter coming by. Listen in to a small slice of the conversation as he talks about what will happen in the quarter to come, more importantly for FY25, FY26.
Yes, it does seem like clockwork, but I can tell you it's been a tremendous amount of effort that's been put in by all our associates. This is a result of multiple businesses firing on all cylinders. We've been talking about that for some time. We are seeing that in the numbers. And that is what has enabled us to be consistent in our growth and provide a growth of 20% quarter over quarter, or rather from the quarter the previous year, as well as on a year-to-date basis, we have grown 20% over the same time period the previous year.
Yeah, I want to start off with autos, naturally so, and some interesting observations really. Okay, actually, before I get to that, can I just quickly ask you, you've done 14.4% margins. Your console margins aided no doubt by what the tractor division is doing so well. We just heard the announcement that China has said that they are not going to let the property sector slump, which arguably means that metal prices could have found a bit of a bottom. Could there be input cost pressures that might be difficult for the industry to meet if indeed steel prices were to end up higher? Or do you reckon that it is something you'll be able to take on your stride?
So Niraj, if we look back at the chart that we presented, over time in the tractor business, we've been able to maintain margins despite fluctuations in industry. The chart did not show commodity prices, but that's something that we have been able to manage over time as well. The auto business has seen growing margins. This is, again, a function of great growth in the business, as well as very strong operational excellence that has been achieved by the team. And there will be challenges along the way. We have seen many challenges, and our approach is to ensure that we are ready to face them, we are agile in terms of addressing them, and we will see quarters where input prices go up or where demand has slackened a little bit, but I think we're well prepared to be able to address those.
Got it. Okay, let me try and talk about some estimates. Now, our math suggests that FY24, I'm talking about electric vehicles first, FY24, the market size was probably 90,000 odd vehicles. We've probably not seen dramatic growth in FY25. And my analyst tells me that on the presentation and in the conference, you guys have said that you will do 60,000 in FY26, nudging up to nearly 1 lakh in FY27. Now, do you expect the market to grow as much, or do you expect that you will essentially grow maybe at the expense of some of the others?
It's going to be a combination of both. The market will expand because the quality of these products is something very different from what we've seen in the market today. And that's something that will create a market expansion. Some of it will also be gaining market share from others. But if you look at which one will be greater, my sense is market expansion will be greater, because this will also enable us to get a much higher penetration of EV in the Indian auto market, and that's something that will continue to happen over the next few years.
Yeah, and because you started exporting as well, I reckon that the South African exports are EVs, and correct me if I'm wrong here, but I'm just trying to understand. But you're starting off on a low base and a low number, forget a base, but a low number relative to what, let's say, Maruti does in an annual year, right? So I'm guessing the sky is the limit, if you will, for you. How do you expect the export market to be for your vehicles, which are now being very well received in the Indian market?
So South Africa is right now about the 3XO, not
yes.
EVs as yet.
Okay.
EVs will be focused on India because we do expect a lot more demand than what we can service. And it's important for us to be able to meet that demand in India before we go to markets outside. But there is huge opportunity for us outside, and that is going to be one of the further growth vectors that we have in the auto business, because we are starting to see a lot more pull and demand for our products in international markets, as we have seen in India. We have not been able to serve international markets well enough so far because we've been focused on serving our customers in India. But as we've increased capacity, this is going to be clearly a growth vector for us.
Not a bad problem to have, Dr. Shah. The other small question that I would have is around the rural versus urban. Now, I remember in Davos, you told me that you are following an EV-first strategy. In this result, you've said that there are no new launches in the ICE segment. So I'm presuming that 3XO and Thar are probably the two that go. Now, I heard various other companies in other markets, other segments, not autos necessarily, say that rural has started to perform better for them. I'm just trying to understand, if the rural markets are picking up, do you service them only through the existing launches that you have? Because I'm guessing rural may not have the appetite for EVs as much and might have a larger appetite for ICE engines.
So to start with, Niraj, we've had two major launches in ICE in the recent past. So which is the reason why in this calendar year we don't see the need for a third new launch. We will continue to have refreshes, and we will have a series of launches again starting next year. So from that perspective, we feel that we've covered ICE very well, and we've got a great set of products there where the demand continues to be very strong. We also expect that EV will get demand from rural markets, and rural has done well for us. Even you see on the tractor side, rural's picked up fairly well. And for us, urbans continue to do well as well. I think it's been a function of the products.
Yeah, okay, fair call. So you're saying the existing ICE engines give you the comfort of meeting the rural demand as it would rise. Okay, fair call. Speaking about that only, I think we spoke about this briefly in Davos, but you still remain confident of the tractor upcycle. The RBI governor has done this 25 basis points. And by the way, I want your view on that as well. Do you think that the policy did enough to spur demand in the economy? So two questions rolled into one. One, that, I mean, for the tractor upcycle, are things firmly in place if the monsoons work well? And two, is there enough done on the liquidity and the rates by the Reserve Bank in the last 1 month to help corporates like yours in the next 2 to 3 quarters, or let's say a couple of quarters?
So we're seeing good demand on the farm side, and we've said that we expect the fourth quarter to be 15% higher than last year, which is a fairly significant number in the context of where we've been in the recent past. And the rate cut should also be looked at in conjunction with the recent demand stimulus that was provided in the budget. And a combination of both of those two factors, I think, will address some of the short-term issues that we were facing in the economy. And I think we will see a fair amount of demand stimulus as a result.
Got it. Is liquidity an issue, Dr. Shah, currently right now for large corporates like yours? And because March is also coming up, or have the measures started kicking in and helping out on that front?
For us, it has not been an issue. For the economy overall, it was an issue till more recently, but we are starting to see some positivity there as well.
Got it. Last couple of questions. One is on the other gems, right? The growth strategy. You outlined that over the last couple of years quite consistently. Yeah. Are all of them meeting the marks that you might have internally set, or is there some work that needs to be done on maybe a couple of them?
We are very happy with where we are right now. Our businesses are performing very well. Not everything is going to be perfect. It never is, and there's always work to be done. So that's something that continues to happen. Some things work very well in a certain point in time, and some require a little more effort. So on balance, I think we are in a very good shape right now.
I have one last question, Dr. Shah, and which is on tech. Now, the banking earnings from the US have been very constructive. People are taking that in their stride and believing that tech spends from the US will be strong. You, of course, are not as dependent as some of the other peers on that, but I'm just taking this hint from you. Do you expect this to be a strong year? You've outlined in the past that you're coming from the lows, if you will, and you are trying to take Tech Mahindra back to its normalcy level. But does the banking commentary and the other commentary from the US and other regions help?
It definitely does help because there's some positivity that we see there. But overall, the business is on a good path. It's on the track that has been outlined, moving towards a 15% margin by 27. And the structure that's been put in place, the focus on delivery excellence, all of those things are very positive. So That's something that will help us keep Tech Mahindra on that turnaround track well.